Fraud and fighting fraud are always hot topics for anybody in the accounting field. But how are technologies like AI, blockchain, and bots impacting that? This is the NJCPA Issues Watch podcast. Welcome back to the NJCPA Issues Watch podcast. I'm your host, Sean Stein Smith, covering all things technology. And I'm always really happy to have these conversations and to really add some value and context around underlying topics, audit, tax, fraud fighting, that all of us deal with anyway. But I'm also really interested in how these tools and applications that all of us hear about almost every single day are impacting and influencing and changing our jobs both now and going forward. And so here in April 2023, I am super happy to have joining us on the podcast my friend and colleague, Stacey Ferris, who is a real expert in everything fraud, forensic, and adding on top of that, policy questions around crypto assets. So I'm really amped to have her joining us today. Welcome to the podcast, Stacey.
Excited to be here, Sean.
Absolutely. And I'm absolutely, really pumped to have you on here. And so to introduce you to our audience, would you mind giving us some background on you and your firm and your other activities outside?
Certainly. So I'm an associate director in the HKA practice, forensic accounting and commercial damages. I've been in forensic accounting on and off for 10 years now. I started my career with Ernst & Young in their forensic, forensic investigation or financial investigation and dispute services. So been doing some kind of forensic work, fraud investigation, due diligence, compliance reviews, etc. my entire career. I'm a CPA and a CFE. And for the last 2 years, I have been an adjunct professor of accounting with the University of Maryland, where I have developed a course on crypto and blockchain, teaching the ins and outs of that to graduate students in the accounting program. Something I've very much enjoyed doing. And then I also, since last year, I'm a mentor in the UMD Blockchain Accelerator. It's something that they sponsor out of their alumni office. And it's a group of companies, startups that usually have some connection to Maryland. Either it's an alumni from Maryland usually, or the company is starting up in the state of Maryland. And so assisting those founders with how to work through all of the challenges of having a young business and trying to make it successful.
Awesome stuff there, Stacey. And all of those sort of external activities and really trying to advise up and coming entrepreneurs, business owners, really just highlight, the sort of growing, I think, understanding that we as the CPA field are more and more actually now sort of moving out of that box of audit, tax, compliance, and more sort of building on those to help entrepreneurs, business owners develop and ultimately grow their business. So awesome stuff there.
Well, there's two sides to everything. And I think there's like the flashy marketing side that's real shiny. And it's like, oh, you want this and this is why it's great. And it's very positive, very optimistic and all that. And then there's just the reality of things. And I think that's where accountants and CPAs and financial people, we live in that reality of, that might be a fantastic service, but here's the reality of, your revenues, your expenses to provide or create that. And so it's a different outlook on things.
Absolutely. And so having sort of that ability to analyze an opportunity from both the upside and also sort of the operational guts of it is a real asset that we all can bring to our external clients both now and going forward. What is the impact of these emerging technologies, which actually aren't really emerging anymore, like blockchain and AI, on fraud fighting and other forensic issues?
So we'll start with blockchain.
Awesome.
Blockchain's impact on it has been largely there's no applications really that are using blockchain, but what is become important in some cases is if there's a fraud or there's an investigation that involves crypto, and you need to be able to understand blockchain records and like what exactly is happening. There's a lot of specialty terms that you have to learn when you're getting into this field. And so, I teach a course on this in 7 weeks. By week 3, my students pretty much have learned all the terms they need, and we can start having real conversations. So there's like a little bit of that jump to get over the terminology piece of it and some of the basic foundational knowledge. But once you've got that, it's not a very super complex or out of the ordinary issue. Most of the frauds and the investigations and the regulatory issues that you're reading about, they all involve things that any forensic accountant is already going to be plenty well aware of. It's just a matter of the way the money is being tracked or accounted for is just in a different fashion, or it's a different type of, well, of course you can't call it money, you can't call it currency. That's an important, like,
you can call it that right here though.
Yeah. Right. So I'm working on an article with the AICPA right now, and you can't use the word currency in relation to crypto assets.
Yes.
And so that's going to be a hard one to get people to work the term cryptocurrency out of their vocabulary. And I think it's going to probably linger and hang on for a while. But anyway, so blockchain, really, the only way it's changing it is that, like, if you're going to do a case that involves crypto, you need to understand blockchain records. If you want to get deep into the blockchain and crypto field, you do need to learn how to use or get certified in one of the crypto tracing platforms. The most popular ones being Chainalysis and CipherTrace. But there's a whole slew of them offering that kind of data. And even then, once you get into the data, it's not a huge learning curve, because the kind of things that you're going to be doing and tracing and tracking and putting together and these analyses, it's not very difficult. It's not a big leap from things that you already do within, say, litigation or fraud investigation. With regards to AI, I think that it remains to be seen what the impact of AI will be on forensic accounting. The thing with AI is that, like, it's going to be great for standard tasks, right? And maybe we can start to use it. I'm excited about the ChatGPT stuff, because maybe we could start to use it on some of the more complex things. The problem with it within forensics is that each case is a little different. It has its own unique pieces of it. The data might be formatted differently. You might get some data on this one, and then the next case you barely get anything. So every matter is so unique that you need, if you're going to use AI in any of that, you need something that can be dynamic and think like a human. It would be fantastic, and I've been talking about this, I feel like, for years now. It would be fantastic to have a tool that can just help me to, and if nothing else, index all the files, the hundreds of files I have, and help me to find data, when I'm trying to, I saw this information. I know we have it. I know there's a schedule somewhere, as opposed to me having to spend, an hour trying to open files and see, where is it? Oh, it's here. No, it's there, that kind of thing. A tool that would be incredible for the forensic accounting side of the house is something that helps me to collate, pull together my information. But I'm talking about, like, theoretical, like my wish list of stuff, right? Most of forensics is still painfully manual. And also what I found happen on a few cases is that the lawyers will ask for it to be laid out in a very simple manner. For instance, if you do a GAO, Government Accountability Office bid protest, if you're working on one of those, the supporting exhibits for that, you can't reference data from another worksheet. You have to lay it out very clearly, all of the different formulas that are used and how you get to your numbers. And that's really what makes a winning exhibit, particularly if you're in front of a jury or a judge who is not particularly sophisticated within the financial stuff. So yeah, you got all these crazy cool analysis tools, and none of it can be used sometimes in creating the exhibits that we have to do for trials.
Interesting stuff. Yeah, because I mean, just as an outsider, right? I would have thought that the tools and the high-powered analytics would be able to be used more often, but all of that really highlights that blockchain, AI, automation, bots, all they are tools, and it's really still up to us to be able to, one, understand them, and two, be able to apply them in the right way based on the project at hand. And so, adding on to that, right? Are there any other, common pain points, challenges that are popping up more often as we have more technology, be it, crypto fraud or otherwise, as we have more technology and automation being integrated into the mainstream, is all of that causing any sort of common pain points or issues for you and your team?
No, I wouldn't say that technology being integrated causes problems. In fact,
Okay.
it's made it easier to work, remotely. I'm obviously in my home today, to work remotely, to collaborate. I work with a number of people who are in Texas and California, so that's been great to be able to collaborate with them through the use of video chats and shared servers and so forth. So one of the big pain points in forensics is that it's very common that the opposing side will provide you their documents in PDFs and the final report with all of its exhibits from the I've done a lot of rebuttal work where you take an opposing expert's report and you just go through it and you try to tear it apart, right? Find all the weaknesses in it. And they'll give it to you in PDF. So if I want to analyze any of his or her numbers or how they did their calculation, or if I want to recreate the calculation but with a different assumption, right?
Okay.
That is a painstaking task of pulling numbers out of a PDF. And now there are some software that can convert to Excel, and they do. It's kind of a hit or miss job. Sometimes they do a good job of it if it's a pretty nice standard PDF. Sometimes the opposing side will be real jerks and they will it looks like they printed it and then scanned it with their phone and then emailed it to you. And it's virtually impossible to use some of the PDF to Excel type tools. So it would be phenomenally amazing if I had a tool that I could be I need to pull out and recreate in Excel all the schedules that are in this report. Oh my goodness, hours of time saved. One of the pain points that we have beyond that is there's just not enough staff. I am forever needing more staff persons to help. Forever it seems like scrambling to find assistance or support on things. And I end up very often, even at my level, I end up very often doing things that I would consider to be a staff or senior level task. But I mean, that's just the way it is, right? So, to assist in that gap, tools that can help me to organize my data, to pull data out of reports, to run scenario analysis once I have all of that, that would be phenomenal in terms of just simplifying the work that I do.
No, and those issues of not having enough staff on hand are issues for everybody in every firm. And and a common sort of convergence point here is that yes, that implementing tools isn't going to fix everything, and it costs money, time, and effort, but it can really help sort of bridge that gap, as you indicated, to help cover some of the work that just isn't getting done by people who aren't there.
Right.
And so, pivoting over to an area that I know is of interest to us both, if I had to ask you your current opinion, grade, sort of outlook on the health of crypto at large, as it pertains to fraud, how would you rank it?
I mean,
well, and so also, I should also sort of, bifurcate that question. FTX by itself, and then everyone else.
Sure. We all knew 2023 was going to be a rough year. Given the way that 2022 went, here's what happened. Everybody builds in 2021 because the whole market is just going through the roof, right?
Yep.
And you remember those two sides of business I was talking about? You got the marketing, the glitzy side, and then you got the reality, the financial analysis. Yeah, everybody got caught up in the marketing and the glitzy side because it was a bull market. It was crazy. Bitcoin went from being it was like at $3,000 in 2019 or something, or 8,000 or something, went up to 68,000 all-time high by the end of 2021. Yep. So that 2-year bull run was, or I guess it'd be like 2.5, almost 3 years. That what you had, and you saw that with FTX, and I'm seeing it just across the board, aside from perhaps Coinbase, they have a lot of compliance staff, and they've certainly been trying to play by the rules, if you will, but nobody paid attention to the risk management. Where were nobody who very few people were getting like regular audits. Auditors frequently were didn't fully understand what they were dealing with, and or they had their scope severely limited, and they didn't even realize maybe that their scope was being so significantly limited because they didn't even understand what they were actually trying to audit. I mean, so the tremendous complexity we know breeds risk and fraud. It always does, without fail. The more complex something gets, the more likely that either something is going to unintentionally go wrong, and the more likely that somebody can abuse it without being caught, right? So complexity breeds risk and fraud. We all knew 2023 was going to be a hard year because the market crashes in 2022. When it crashes, all of the Ponzi scheme type frauds that relied on the appreciation or the high value, they all collapsed, right? Yep. And even projects that are legitimate that just relied on the market appreciation collapsed. It was pretty obvious about halfway through 2022, like this is going to be next year is going to be rough, Now it's well known in the crypto space that, or many people espouse that crypto follows 4-year cycles. And for the last 10 years, that's kind of what it's done. It follows 4-year cycles of a boom and a bust. So many are predicting that we're in the bust right now, and we'll have another boom around 2025 or 26. Remains to be seen. I will say that it has been very interesting this year. Some of the developments, the rhetoric from some regulators and some legislators has been surprisingly vitriolic. It has surprised me a little bit.
That's putting it mildly, but yeah.
Yeah, right. We've got the rollout of the FedNow program, which everyone's calling a CBDC. It's not really a CBDC. It's a payment processing platform for dollars. The Fed previously, or the Treasury previously, kind of delayed and said, well, we don't really want to do a CBDC. We've done a lot of research into it. We're not sure if we're going to launch. They're choosing this method. It has a similar effect. So all of the things that people are afraid of with a CBDC, kind of same scenario with this FedNow thing. We'll see what happens. I mean, and where it goes. But with that rolling out, I think that we are definitely moving into a fully digital economy. Yeah. It's hard for me to imagine that all crypto is going to dissolve and go away. I certainly think that we're going through a clean out of the market. The smaller projects, the fraudulent, the altcoins, the illiquid coins, they can't weather this. And all the better, because we don't need a market that's rife with fraudulent coins and get rich quick schemes and rug pulls.
Absolutely.
If crypto is going to fulfill its original purpose, it needs to just be really kind of like a handful of trusted types of assets that people use for transacting in digital spaces. So in terms of the health of the crypto sector, I'd say that it's definitely sick. And we right now we're at a point where it's when the doctor says, go home, get rest, drink lots of water.
Okay.
But you don't know how much longer you're going to be sick.
Gotcha. Okay. And yeah, and I would say that that's sort of that ranking and that assessment is, I think, accurate. That there's a lot of flushing out that is currently going on. That I've been saying for a long time, that there's probably only going to be room for maybe 10 to 20 tokens out there, be it Bitcoin, privately issued stable coins, all the rest. But that the market, globally, that operating compliance, it's is not going to be 200,000 coins out there.
Well, let me just put out there that this has been proposed, I believe, in some other countries, not in the United States, but I'm a little more optimistic that it's going to be more than 20. I think that you're going to get DeFi synthetics,
Okay.
and there's been a lot of exploration right now. The hot thing, right, is using DeFi as a way of issuing stock for non-Fortune 500, non-listed companies, right?
Yeah. Mm-hmm.
So it could become a way of, like, have you ever heard about private companies that are like launching something and they have a private set of investors? You're like, gosh, I wish I could invest in that, right? So DeFi and the whole concept of DeFi synthetics, where essentially you issue a coin that gets booked as equity instead of being booked as an asset, kind of. Like it's an asset for the buyers, but it's equity for the business. So that's been broached, and that might open the door to allow, if we had a regulated market for it. If we have a regulated, it opens the potential that you can then have lots of investment in small companies. Small companies can then fundraise from the public. Obviously, just as equally risky as stock investing, but it could potentially open a lot more liquidity to businesses and reduce the need for, like, a business needs liquidity. Well, right now they're sourced and they're a private business, right? They don't want to issue a bond, they don't want to issue stock, or they don't have the ability to do it. They can go to the bank for a loan, right? Or a line of credit. So this potentially opens up another door where small business, private businesses can have access to liquidity. It could be a real boon for the economy to kind of find a way to develop that for small business or non-public business.
There we go. Interesting stuff though, and really sort of those topics, which I know I've been hearing quite a bit about, are really sort of a good indication, I would say, that the market and the developers out there, innovators, entrepreneurs, are trying to move beyond just issuing tokens quickly to make money, and are instead trying to build out business models and plans that actually add economic value, right? Tangible value to the creators and to the investors. And so, if now, obviously, right, there's a ton going on in every aspect of this whole conversation. So if I had to ask you 2 or 3 ways or tips that the folks tuning in today could be up to date on these topics, what are those going to be?
If someone's interested in the crypto space, I strongly recommend finding an intro to blockchain core. Let me back up. Lots of free resources out there. You can start on YouTube and just search what is blockchain, right? And that's one place to start. One thing that a practitioner is going to have to keep in mind is that a lot of the free resources are not written from an accounting perspective. Now, I guess I can use this opportunity to kind of like pump the fact that I have developed the digital asset hierarchy, which kind of breaks down the landscape of digital assets. It should be out in the Journal of Accountancy sometime in the next few months. And that, I think, is a good tool for, well, what I've heard from people is that they find it a good tool for trying to begin to understand what is the landscape from an accounting perspective. When you first, like, for instance, if you go over to CoinMarketCap and you look at their list of coins, I mean, one of the first things you're probably going to feel is a little overwhelmed of, like, just the tremendous amount of data and all these different coins and, like, what is all of this, right? So I mean, I started in the space by I was just hungry for knowledge, right? I I watched every video I could get my hands on. I read every article. I listened to every podcast I could about on this topic. I went to every conference and a free event in the DC area back in 2016, 17. There were loads of free conferences and free events around blockchain. So I was a little lucky that that's when I was, getting interested in it. There's less so now, but I still think that there's a lot of opportunities to network with people, to connect with them, lots of learning opportunities. Start there, right? See if it's something you're really interested in, if it's something you really care about. I mean, some people are going to start to learn about this, and I've seen this happen. They start to learn about it, and then they're just like, well, I think this is all stupid. How does this stuff even have value, right? And then they don't really want to learn more about it. So, I mean, kind of understanding where you stand on that. Do you think it has value? Are you interested in the area? That's kind of like your first hurdle to clear. So there's lots of free resources. You can also look through academic accounting journals. There's been articles on, how to audit crypto assets. Well, not just articles, but actual studies of it. Plenty of resources from, the Big Four do a lot of publishing online about what is blockchain, what are the audit issues, and so forth. We've got a FASB standard coming out. We've got the exposure draft out right now. I'm working on, pulling together a response from the crypto CFO community. So we'll have an actual standard soon. Visiting, if you just Google FASB accounting for crypto assets, it should pull up their webpage. Or you can also do, FASB accounting for crypto assets exposure draft. You can probably get your hands on a copy of the exposure draft. And reading through that, which is a very short document, actually, I'd say the core material is probably like 4 or 5 pages. And that'll give you a good start and a good foundation for like, where are we accounting wise? And that would be, I would say that, a lot of what you have to do is self-paced and self-guided. Start with the basics, kind of make sure you understand the basics, then jump into more of the accounting specific stuff. Well
said, and I would just echo that there's a lot of great free information out there, but it's always good to try to go in there knowing who is writing that information. And so that's why I was extra happy to hear you, touting the academic articles, FASB stuff, more or as unbiased as you're going to get.
Right. Okay. Right. And right. It's good to keep in mind that, well, I think I already said it, but the tons of free stuff out there. You don't need to pay for anything. You really don't. At least not initially. You can pay for something if you want to have a certification, which I don't have any. I teach the stuff. I have no certifications in blockchain or crypto or anything like that. So you don't really need a certification, in my opinion. And I'm sure I'm going to not make friends by saying that, but lots of free resources out there.
And, on that note, it has honestly been a blast having you on, Stacey. Chock full of really good information, insights, and really your expertise has honestly been great to have here on the podcast. And I have to have you on hopefully towards the end of the current year to then go back and to analyze how these things actually did unfold. And for any of you who are not yet part of the NJCPA Emerging Technologies Interest Group, I highly encourage you to go online and actually join at njcpa.org/groups. And all of our episodes of the NJCPA IssuesWatch podcast, tech and otherwise, are all available at njcpa.org/podcast.